Next chapter is leasing and hire purchase. First few minutes we'll understand the theoretical background, then we'll solve problems also. What is a leasing arrangement? There is a person who owns an asset and he wants to earn money from that asset by renting it out, by giving it on rent. He does not want to use the asset himself, but he wants to earn income by giving it on rent. There is another person who does not own the asset. He wants to use the asset. He does not want to purchase the asset, he only wants to use the asset. So he is called in this example lessee. So he will pay lease rental, periodic consideration in the form of lease rental, and he gets the right to use the asset. So it's a win-win situation for both parties. How is lessor benefited? He earns income. Suppose you have a house property, you can give it on rent, and every month you will get rental income. And you are a lessee, how you are benefited? If you have to purchase that house property, you have to invest 2 crore rupees. Now you can simply pay monthly rent of 20,000 rupees and you can enjoy the possession of that house. Is it right? Owner is not the user, user is not the owner. That is the special thing about lease. So in this chapter you have to study the question from both parties' point of view. From the lessor's point of view, it is simply an investment decision. It is like a capital budgeting decision. He has to purchase the asset, so there is an investment involved, and then he will earn future cash flow in the form of lease rental. If the present value of future cash flow is more than the initial investment after considering tax adjustments, if it is positive, what is called NPV is positive, you will give the asset on lease. And for the lessee also, it is making a choice between whether we should purchase the asset or take the asset on lease. So he will compare the present value of cash flow under both the options. Whichever is lower in terms of outflow, he will select that option. So in the last 20-30 years, this leasing business has flourished like anything. One of the fastest growing businesses is leasing business. Okay, because companies also now don't want to put money in the assets. Technology is changing. They don't have capital investment also. Okay, so it's better you only take the asset on lease for as long as you need it. Your money is not blocked in that asset. Okay. And the lessor, they get huge rate of return. If they can manage the business well, by investing in an asset, they earn a rate of return which is much more than what you earn by investing in a bank FD or a government security. Is it right? So if you have a good business skill, you can earn many times more return than what you will earn by only investing in some kind of securities. So we'll understand the financial logic of all leasing problems. First, some basic part. What is lease? Everything is written in your book. Lease is a contract between the owner of the asset, that is the lessor, and the user of the asset, who is called lessee, for the right to use the asset during a specified period called lease period, in return for a mutually agreed periodic payment, that is called lease rental. The important feature of lease is that owner does not use the asset, user does not own the asset. Separation of ownership and usage. When you will solve the problem, certain number crunching you have to done. So you should know some basic facts. Asset is owned by the lessor, used by the lessee. For taxation purpose, tax purpose, who will get the depreciation tax shield? As per income tax law in India, it is the owner of the asset, legal owner of the asset, will be allowed tax shield on depreciation. So that is one major benefit of owning an asset, and giving it on lease because it helps you to save the taxes. Tax rates in India is very high. How much is that? 30% minimum. Then you have to pay surcharge. Then different types of cess. Okay. So all those will be saved. There is a disadvantage of being a lessee here. You will not get the tax shield on depreciation, even though you are using the asset. Lease rental. Lease rental is an income for the lessor. But at the same time, there is a disadvantage. You have to pay tax. So while solving the problem, you will earn lease rental, cash inflow, minus tax paid is net lease rental income. Okay. One of the reasons why now many companies are going for leasing option, there is a serious financial advantage here. What is that? The entire lease rental is a tax deductible expenditure. If you own the asset, they'll give you depreciation at 10%. Am I right? Or 15%. What is that slab rates? I don't know. 10%, 20%, 15%. These are the slabs. On that you'll get depreciation. On WDV basis, every year your depreciation will keep on reducing. But here you pay lease rental and the entire lease rental is adjustable against your income. So it saves taxes for you. Who enjoys salvage value? Lessor. He is the owner, na? But lessee will not get salvage value. Sometimes he is given an option to purchase the asset. If he buys the asset, then it is a possible outflow. Possible outflow because it is not necessary in every problem. He has to purchase the asset. Question number 1 for you in the exam. What are the advantages and disadvantages of leasing from lessee and lessor's point of view? Is it right? So first we'll see the advantage. Why do companies go for leasing options? One is you don't have to invest your capital. With zero investment also you can get a right to use the asset. Is it right? Second benefit of leasing is flexibility and convenience. If you take a bank loan, most of the terms and conditions are pre-decided by the bank. You have to only sign on the dotted line, right? Can you change the agreement, terms and condition? No, it's only pre-printed form only. Is it right? You just have to sign it. You can't negotiate much. But in case of leasing, it's a tailor-made contract. What is tailor-made? Customized. Everything can be customized. The lease period, the lease rental, okay, security. Third benefit is that the lessee can plan his cash flows accordingly. He knows that these are the lease rental to be paid at different point of time. Okay. So planning of cash flow becomes simple. In business, you have to ensure that your cash flow is properly planned. Otherwise, someday you don't have money and your business will be stuck. Creditors will shout, you will not pay tax to the government, you will not pay installment to the bank loan. So you can plan accordingly and you can enter into similar leasing arrangement. There are different ways leasing arrangement can be done. Lower lease rental in earlier year, higher lease rental in the later years. Or sometimes 2-3 years no lease rental and then a bullet payment towards the end. That is also possible. Why leasing is popular? Simple procedure. Compared to bank loan. Go to bank, take a bank loan, see how many documents you have to fill for, right, how many procedure you have to perform, then you will get a loan. Go to a lessor, sit down, what do you want? This machine. In next 3 hours you will go away with that asset also probably. Is it right? The procedure is simple. Benefit of leasing to the lessee. Why leasing is so popular with lessees? Tax shield on lease rental. Entire lease rental are tax deductible. And one more reason why companies go for leasing option, it helps in window dressing. What is window dressing? It means your performance, profitability, return on capital employed, seems to be much better than what they actually are. Example, company 1, company 2. Company 1 says we will own the asset, okay. Company 2 says we will take the asset on lease. If you own the asset or if you lease the asset, your profit will be same. Will this computer generate more profit for me because I own it? Will you take admission only if the computer is owned by me and refuse to attend the class if it is leased? You don't know whether it is owned or leased. So for us, for the customer, for the buyer, that is the source of revenue is not affected by whether you own it or lease it. Remaining cost will be same. Here I will charge depreciation. Here I will charge lease rental. If you own the asset, the expenditure you are going to charge is depreciation. Here equivalent amount or similar amount I am going to charge as lease rental. Some amount may be different. So for the time being, assume profit is 100 rupees for both companies. But what about capital employed? Capital employed, this company will be employing say 1000 rupees. But this company may be employing only 500. Remaining 500 assets are leased asset, not our asset. It's not appearing in our books of account. If it is an operating lease, the asset won't appear in your books of account. Although the asset is generating income, income will appear in P&L account, but the asset will not appear in balance sheet. So capital employed is lower in situation 2, whereas capital employed is higher in situation 1 because you're owning the asset. Is it right? Compute return on capital employed, 10%, 20%. That is window dressing. Now obviously, outside world, they will compare the return on capital employed and they will find that company 2 has a high rate of return on capital employed. So this is better, okay. So it will give an impression to the outside world, 2 is better than 1. 2 is better than 1 only in one sense because they use their leasing as an option rather than owning the asset. Second example of window dressing, company 1, company 2, same two companies. Assets appearing in balance sheet, here it was 1000, here it is 500. Okay. Sales. Suppose sale of both companies 2000. Sale of both company will be 2000. Sale will not be affected whether you own the asset or lease the asset. Calculate asset turnover ratio. Asset turnover ratio means sales upon assets. So this will show 2 times. This will show 4 times. One important ratio for checking the efficiency, performance, utilization of capacity is asset turnover ratio. That means it appears from the question, company 1 has invested 1 rupee, generates 2 rupees of sale. Company 2 has invested 1 rupee and generates 4 rupees of sale. So it appears from the question, company 2 is more efficient than 1 in terms of its asset utilization. But actually they are also using the assets of 1000 only. 500 assets don't appear in their books. But that everybody may not know. You are a CA, you understand accounting. But outside world, Dhoni, Kohli, Shikhar Dhawan don't understand. Okay. They will only look at the ratios and invest. Next, less risk. Another reason why leasing is popular. You don't own the asset. What if the technology changes and that asset becomes obsolete? You don't have a risk. You can return the asset back. Again, it all depends on terms and condition also. But to a large extent, you are protected from changes in technology. Then one more reason for leasing, sale and leaseback. This we'll discuss again after some time. What is sale and lease back? So one company A owns aircraft, okay, doesn't have money to run the airline business. You need money. You don't have funds. You have aircraft. 10 aircrafts you have. They are not flying. So they are on the ground. So next thing what you do, sell it to B. Sell it to B. So you'll receive funds. Suppose each aircraft is of 50 crore. There are 10 aircrafts. So 500 crore rupees cash you will be able to raise. Take the asset on lease. We will give the same 10 aircrafts to A on lease now. So now A has got funds. A has got asset also. He can start his business again. But now he is not the owner. Now he is not the owner of his asset. He is the lessee of his own asset, which he used to own some time back. But doesn't matter. At least you can get funds and you can start the business. So that is called sale and lease back. So one good reason for sale and lease back transactions is it helps you to raise the funds and you also continue to use the asset. Your business continuity will be there. Second reason could be tax planning. So how tax planning can be done? But then government should not get to know about it. If they get to know about it, then they will add back. Okay, whatever, and penalty also. A is a person in high tax bracket, 30 plus all cess surcharge. B is a party in a no tax bracket. His income is up to 3 lakh only. 3-4 lakh rupees. Okay, they don't have to pay tax. So what A will do? A will sell to B. Sale and lease back at a loss. At a loss. So what is the benefit of selling at a loss? Cost of the asset is 1 crore, 100 lakhs. Sold it for 20 lakhs. 80 lakh loss can be set off against some other income. Is it right? You will get tax saving and you take the asset again on lease and then you pay lease rental. Pay 3 lakh rupees lease rental per annum. So what will happen? You will get deduction. To this party, A will claim it as an expense and they will save 30% of 3 lakh in taxation. This party B will receive it as an income, but they don't have to pay tax. They are in the exemption limit, below exemption limit. Okay. So on one hand, one party is claiming tax deduction, other party is not paying tax on that. So as a joint venture, it is a tax saving. Is it right? It helps in tax saving also. That is why in income tax, if the government finds out these transactions are only for tax evasion, then they will not allow this deduction. Next is no dilution of ownership or control. Suppose you want to start a business, you need funds of 100 crore rupees. How do you raise funds? You have to issue equity, you have to issue debenture. If you issue equity to raise funds, it will result into dilution of control. So what you do, instead of issuing equity, you can acquire the asset on lease. You can acquire the asset on lease. So without issuing equity share, you are able to get the asset and you can start the business. So many companies, one more reason for going for leasing option is you don't have to raise funds by issue of equity or debenture. Okay, especially equity we are talking about. If you issue equity, it will be dilution. Nobody wants dilution of control. Benefit to the lessor. He is the owner of the asset. So therefore there is full security. If the lessee doesn't pay, you can repurchase the asset. Second benefit is that you don't use the asset, still you get the depreciation tax shield under Income Tax Act. Okay, so it helps you to save a lot of taxes. Third is regular source of income. Buy an asset, give it on lease, sleep now. Every month you'll get rent. Is it right? And lessor also enjoys the salvage value. Some more benefits. It is nothing but a different form of lending, but it gives higher return. Point number, this and this I will read together. You have 1 crore rupees with you. What you can do? Invest in a bank deposit. You'll get 6-7% interest. Or suppose you invest in a government security, you'll get 6-7%, 8% interest. Other option is you purchase an asset with that 1 crore, okay, and you give it on lease, and you charge say 18 lakh rupees rent per annum. So rate of return will increase from 6 or 7% to 18%, and plus some tax advantage is also there. You'll get depreciation, etc. So it gives you a very high rate of return as compared to a normal bank FD return or government security return, and relatively the risk is also less. Relatively the risk is also less. You are supposed it's a house property. You are the legal owner of the property. You have a registered agreement that we give this asset on lease for 3 years only. After 3 years you will get the asset back. There is an appreciation in the value of asset sometimes, and plus the regular income that you are generating. Ownership remains with the lessor, that we have discussed. One more new point understand, debt securitization. Suppose you have a house property which you give it on rent. Suppose you have given it on rent to State Bank of India for 5 years. So now you are sure for next 5 years we'll receive our rent. Is the chance of default there? If you give to a good party, then chance of default is less. So next 5 years you are going to receive the rent. One option is just give it on rent and now you sleep, enjoy. But if you are more adventurous person, you will go to a investor and you tell him, see, I have this lease rental receivable over next 5 years. I am going to receive 10 lakh, 10 lakh, 10 lakh for next 5 years. Can you lend me money? He says, what is the mode of payment? He says that I will assign this lease rental to you. I will assign that is as and when this lease rental will be received from the bank, it will be passed on to you. You give me loan today. So how much loan he will give you? Not 50 lakh. Present value of 10 lakh annuity. It's an annuity, so they will calculate the present value. This is what securitization is. We raise funds today and pay it out of the future receivables. Is it right? That is securitization, issue of security or raising funds against the future receivables. This is future lease receivable. So you got, say for example 80 lakh rupees after discounting. 80 ज़्यादा हो गया, 30 lakh, 50 तो total है, तो 80 कैसे हो गया? With discounting it will be say 30 lakh. So what you do with that 30 lakh? You construct one more house property. Now give it to Dena Bank. Okay. Again enter into such lease arrangement. Again you will have future lease receivable. Again raise funds against the future lease receivable. Again you will get money. Again purchase a property. Again give it on lease. Again go for securitization. Is it right? So you can actually, from a small capital base, you can create more and more assets. Is it right? That is called securitization. You will find all these properties nearby area are on lease only. Why don't these builders nowadays sell the property? Lease. They give it on lease, they raise funds, again construct one more building nearby, again give it on lease, again repeat the exercise. Is it right? Some business acumen is required, and then you can multiply your wealth through this securitization process. Next is disadvantage of lease. So this question is also important because students generally remember the advantages. The student will remember advantage, institute will ask disadvantage. First is generally, not necessarily, generally, there is no moratorium period. What is the meaning of no moratorium period? That means first few years you don't have to pay the lease rental, then you start paying. That is called moratorium period. Like suppose if you take a loan from a bank like SIDB, Small Industrial Development Bank of India, and if it is a new business, then this new business will say that I don't have income for first 2 years. First 2 years will be required only to set up the business, to create a brand, to create a market. So I won't be able to pay. But next 3 years I will pay you a higher lease rental, which will compensate you for first 2 years. So generally they will agree. So first 2 years is moratorium period in our example. But suppose you go to your landlord where you stay right now and tell him that first 2 years I will not pay you any rent. I'll pay you from third year onwards. Just try that option. Most cases they will say no. In fact, they will say first to give me advance for 11 months and then we'll discuss. But yes, nowadays businessmen who are into this business, they can accept the moratorium period sometimes. So it's not that it is always no, it depends on situation. But generally it is not available. Warranties are not available to lessee. Who is the legal owner of the asset? Lessor. Suppose you have taken a car on lease, but car is registered in the name of lessor. So you cannot claim the warranty. You have to go to the lessor. Through the lessor, the warranty claim can be done by you. If car creates problem, what you will do? You will not go to the dealer directly. You are not the owner. Dealer will not entertain you. So therefore, this kind of small problems will arise. Then one serious drawback of leasing is that restriction on use. For example, if you take a house property on lease, so what are the restrictions you may have to face? You cannot make any addition or alteration. Can you? Suppose a 2-storied building you have taken on rent, can you add one more there? Obviously no, you are not the owner. You have to ask the lessor. If he agrees, then maybe yes. Or suppose you want to draw a partition there. You want to use half of the building for office work, half for residence. Is it right? So you require a wall in between. Can you do yourself? No. Any change in the asset is to be, first you have to take the approval of the lessor. If it is a machine, they may put a restriction on the hours that you can use per day. Okay. So lessee may not be permitted to make alteration, addition to suit his needs. And next is you are not the owner of the asset. If you don't pay the rent in time, asset will be repossessed. You don't enjoy the salvage value of the asset. Okay. So since you are not an owner, there is a risk that you may be asked to leave that premise or return the asset back in case if you don't pay. And sometimes the value of the asset increases. Like for example, if it is a property, real estate, you don't enjoy the salvage value. What are the types of lease period? Primary. secondary. What happens in primary lease period? The lessor recovers not only the cost of the asset but also the time value of money. Lessor recovers not only the cost of the asset but also time value of money. So cost of the asset is 1 lakh and he charges lease rental 35,000 per annum for 5 years. So this total you will receive 1,75,000 over 5-year period. Cost of the asset to lessor is how much? 1 lakh. He gave it on lease for 5 years at 35,000 rupees. So his total income from the asset is 1,75,000. So why that extra 75,000 he has earned? Time value of money. You have to invest now. You will receive cash flow in future year. So one, your time value of money is there. Second, risk is there. Okay, so in the 5 year he is able to recover his cost and his desired rate of return. This 5-year period will be called primary lease period. And what is secondary lease period? Now he has recovered his cost and time value of money. He may give the asset for another 5 year. Next 5 year. Lease rental may be say 5,000 rupees per annum. He has already recovered the cost and time value of money. So in secondary period, normally the lease rental is very low or sometimes free also, right? When you will solve the problem, for you, the cash flows will be 1 to 5, 35,000, 6 to 10, 5,000. Year 0 investment, 1 lakh. So this will be your numbers. Depending upon the question, you have to further do the calculation. Either you have to find NPV, or you have to find IRR, or you have to find profitability index in this problem and accordingly decide. Okay, but we will take this also in our calculation. Next is a long discussion on types of leases, which is a question for 4 mark. Operating lease. What is operating lease? A student of financial reporting account should also know what is operating lease and what is finance lease. Operating leases are for smaller period. Now what is smaller? It depends on total life of the asset and the lease period. Say for example, car. What is the life of car? Say 20 years. And lease period is 1 year. So what is the nature of lease? Operating lease. Is it right? Operating lease means it's for a small duration. Like for example, you have come to study in a city. You want to only study and then go back. So you'll take a flat on lease. What is that lease? Operating. The life of the flat may be 40 years, but you are going to use it only for 3 years. That is called operating lease. So from one lessee, you will not recover the cost of the asset. But the same asset is leased out to multiple lessees, and thus the lessor is able to enjoy the return. After you leave the flat after 3 years, what will happen? Will he keep it vacant for next 37 years? Again, he will give it on lease. So his total income will be recovered from multiple leases. You can always lease out to another party. Such leases are easy to cancel also. Operating leases are easy to cancel. That is why generally it is advisable that one should go for operating lease. Why? Easy to cancel. How do you cancel? By giving a short notice. If you have a flat on lease, you will find it is written in that lease agreement. Either of the party can terminate the lease agreement by giving a notice of 2 months or 1 month. In case if he does not want to give the notice, then he will have to pay the lease rental of that 1 or 2 months period. That's it. That is the only risk you have. Is it right? But in finance lease, which I'll discuss after this, it's not easy to cancel. Why will you go for operating lease? Why should you go for operating lease? Reasons are as follows. One is future is uncertain. Future is uncertain. Okay. That means you don't know whether you will require this asset or not. Technology may change. Demand may change. Is it right? So this is basically useful when the asset is subject to changes in technology. So you don't want to take that risk. So it's better you take the asset on lease. If the technology changes, you return it back to the lessor. That is his headache now. Okay. Secondly, when you don't have funds to purchase an asset immediately, what will you do? Suppose you will become CA after some weeks and months. You want to start an office. You don't have money. So till that time, take it on lease for next 5-6 years, earn money, and then you can own. So sometimes to tide over a temporary financial problem, you can go for operating lease. When you don't require the asset for long term, you go for operating lease. When there is future is uncertain, go for operating lease. When technology is likely to change, you will go for operating lease. Next is financial lease. Financial leases are for longer period. Now what is the meaning of longer period here? It means the lease period is equal to economic life of the asset or useful life of the asset. Then it is longer. If not equal, almost equal. For example, life of a car is say 10 years and the lease term is say 8 years. Then it is finance lease, almost 10 years now. Okay. So it is relative term. If the lease term almost covers the entire life of the asset so that only 1 or 2 persons can use it, maybe one only, then such leases will be called finance lease. They are usually non-cancelable because the lessor has invested money according to your requirement. Is it right? And if all of a sudden you cancel it, then he may not find another lessee. Sometimes certain leases are specified, designed according to the needs of the customer. And then you can't give it to another. Like in this classroom, you'll find some equipments are there. Only we can use it. You can't use it. Can you? Can you use this recording system? It's of no use to you. So therefore, for the lessor, he cannot give it to others now. Okay. It has been designed, programmed for the requirement of this classroom only. So therefore, these are non-cancelable. If I cancel, I have to pay the lease rental for the balance period. Suppose lease term is for 8 years. 3 years are over. Now I say I don't want it. I want to change. He says okay. But first you pay the lease rental for remaining 5 years. Or there may be a serious penalty. Heavy penalty. If not say lease rental for 5 years, they will say you have to pay so much of money to cancel the lease, which will be a very high sum. So then you'll think it is better we continue only. Who will pay for the maintenance, insurance? Lessee. Who enjoys all the cost and benefit risk and benefit associated with the asset? Lessee. In fact, in your accounting standard 19 leases, it is said that all substantial risk and reward is transferred to the lessee, then such lease will be called finance lease. When all substantial risk and reward of ownership is transferred. So suppose the asset generates more output, you will enjoy. Asset remains idle, unused, you will bear the loss. Okay, asset creates any problem, you will have to bear the loss. And generally, not necessarily, the asset is sold to the lessee at the end of lease term. The reason? Because the asset has already been used for almost its entire economic life. Secondly, most of the time the assets are very special. So they can be used only by that particular lessee, others may not be able to use it. So therefore it is better to transfer the asset either free of cost or at a very nominal amount to the same lessee. Now one important question is difference between finance lease and operating lease. So I have summarized it. Nowadays in the exam they ask difference between. The reason two questions will be tested simultaneously. Instead of asking one question operating lease, finance lease, why not to ask difference? So students' knowledge of both can be tested. Lease term is in finance lease closer to economic life. Operating lease significantly lower than economic life. Cancellation. Lease cannot be cancelled during primary lease period. Not easy to cancel. There is a serious penalty, heavy penalty for cancellation here. In operating lease, it can be cancelled prior to expiration date by giving a short notice. Recovery of cost of asset. The lessee or the lessor recovers the cost of the asset and time value of money from one single lessee. Whereas in operating lease, from one single lessee you are not able to recover the cost. But the same asset is leased out to multiple lessees, and from multiple lessees you are able to recover the cost and time value of money. Maintenance and taxes. Who will pay for maintenance and taxes? In case of finance lease, lessee, unless otherwise agreed upon. In case of operating lease, generally it is the lessor who has to provide maintenance and taxes. Who will bear the risk of obsolescence? Lessor. Something changes in future, but it is a long-term lease. He cannot cancel it. So if something changes, he will have to pay for it. But in case of operating lease, it is the lessor who will bear the risk of obsolescence. The moment the technology changes, the asset will be surrendered by the lessee by giving a short notice. Okay. And what is the interest in the asset? Lessor's interest in the asset is only more like a financer. In a finance lease, a lessor is like a financer. Although we are calling it as a lease, but in substance it is a financing arrangement. Instead of taking a loan from a bank and buying the asset and paying installment to the bank, you are taking an asset on the lease from the lessor, paying him lease rental, which will be almost equal to the installment that you would have paid to the bank, and it is almost for the same period for which you have paid the bank installment. So it looks like lease, but is actually a financing arrangement. So lessor's role is like a financer. He has no other interest in the asset. Whereas in case of operating lease, the lessor is continuously interested in the asset. He knows that I have to give the asset again to another party. Once your first lease is over, take the asset back, give it to another party. So his interest in the asset is continuous. Next is leveraged lease. What is leveraged lease? For that, first we'll go to one example printed below. Okay. There are 4 parties involved. This person, lessee, he wants to purchase an aircraft. Lessee wants to purchase he goes to the bank. Okay, he goes to State Bank of India and tells him, please give me 60 crore rupees. I want to purchase an aircraft. SBI says, okay. Who are you? You say, I am a CA final financial reporting teacher, SFM teacher. Acha. And you want an aircraft. Ting tong. Watchman comes. Take this man out. He's out of his senses. Okay. So I was thrown out of the door. Then I went to Lessor. Lessor is a reputed agency. Okay. Cholamandalam Finance. Then I say, I want to purchase an aircraft. They are little sensible people. They say, okay, sit down. What happened? Why don't you take a loan from SBI? I said, they are refusing to pay. This company has a better reputation in the market. They go to bank and they borrow money. Some money they put from their own pocket. Then they go to the manufacturer, purchase the asset, takes loan from the bank, puts some own equity and purchase an asset and give it on lease. Is it right? So when the lessor uses borrowed money because he has a better credit rating, better reputation, better credit worthiness, ability to borrow, so he uses his leverage. He has a power to borrow. And using that borrowing power, he borrows money, buys the asset and gives it on lease to the lessee. Then it is called a leverage lease. Use of borrowed money to give the asset on lease. So in which kind of situation leverage lease will be useful? Generally when the value of the asset is very high, expensive. Last line on the screen. Such leases are structured for very expensive asset like plane or a ship. And the third party is usually a financial institutions like bank, insurance company or UTI, mutual funds. That is leverage lease. Now another example we have already discussed, will not take much time, sale and lease back. See this diagram for sale and lease back. A seller owns the asset, does not have funds. He wants to use it also. So he will sell it to the buyer, raise funds, take the same asset on lease. So you get the asset also now, you get funds and you can run the business. So only thing is that you should not be emotionally attached with the asset. You have to surrender your ownership, give up your ownership and be willing to now use the asset as a lessee. And therefore your business can restart. You can use it for tax planning also. I had explained. Next you tick mark sales aid lease. What is that? So suppose you want to purchase a car. Okay, after you have become CA, you want to purchase one car now. Tata Indica. No, BMW. Okay. So you are Mr. A. You go to this BMW car dealer showroom. So you are going. All of a sudden you'll find somebody stops you. Where are you going? I am going to this BMW car showroom. Do you have money? You say no. Wait, don't get disappointed. I am the lessor. I will help you to buy the car. Okay. So now this lessor will take you to this BMW car showroom and he says, select which one you want. You said, I want this one, black color. Okay. Why black? President of USA also uses black color. Okay, so that is why. Anyway, that was just a joke. So the lessor will say, I will purchase the car. You don't have money. And I will give it on lease to you. And then he goes to this BMW car dealer. He says, see, I brought one customer for you. What is my commission? So he will get commission from the dealer. He'll get lease rental from the lessee. So it is a win-win situation for all three parties. WWW. Okay. Customer does not have enough money to buy the car, can still enjoy the car by paying some monthly lease rental, which he can afford to pay. Lessor is doubly benefited. He gets commission, hefty commission from the car showroom, Is it right? That is why when you enter the showroom of a car company or two-wheeler company, two types of salesmen will approach you. Who will approach you first? Can you just guess? The finance company salesman is able to track you faster, catch you faster than the car dealer showroom salesman. Is it right? So nowadays they have a permanent counter also there. Okay, and it is just they are sitting next to the gate only waiting for the customer. Just like an eagle is waiting for the rat to come out of the hole and grab it, they are like this. And therefore he gets commission. How is car showroom benefited? This person otherwise would have come, taken a free test ride and would have gone away. But he will not purchase after knowing the price of the car. But now they're able to sell the car. So sales increases. Okay, so that is sales aid lease. So what is the summary? The lessor helps the dealer in promoting his sales. In fact, now in newspaper advertisement also you'll find it says car easy finance available at these places. Okay, Bajaj Finance, Tata Finance, Kotak Finance. And when you go to them, then you'll find it is more like leasing arrangement. Easy finance. What is direct leasing? Mr. A wants to buy a BMW car. This BMW car dealer is thinking that every time customer approaches us, this finance company catches hold of him. Okay, why not, when the customer comes to us, we will directly offer him the asset on lease. That can be done, no? So now the BMW car gives him two options. He knows that this car is expensive. Indians are price sensitive. Okay, so he will not purchase. He will just come, see, ask unnecessary questions, and then finally go away. So he says, okay, we'll give you two options. We'll give you the car if you want to purchase, or we can also give it on lease. So this way, this dealer is benefited. They are able to increase the sales and they are able to save that commission cost which they had to pay to the finance company. So that is why it is called direct leasing. That means the seller gives an option to the buyer that you can also purchase on lease. You can acquire the asset on lease. Okay. This way they are able to promote their sales. So in India now all car companies invariably have a leasing route also. Not directly but through their 100% owned subsidiaries, which is as good as directly only, but for whatever reasons, business reasons, they first create a 100% owned subsidiary and through that they give you an option to purchase the asset on lease. Okay, so that is direct leasing, and it has really increased the sales of cars like anything. Cars, automobile, trucks. Those who don't have money to buy, they can also enjoy the asset now. What is an open-ended lease? This was a 4-mark question in the exam. Now you can't write anything on your own unless you have read it. Open-ended lease means the lessee has to compulsorily purchase the asset after the lease term. The lessee has to compulsorily purchase the asset after the lease term is over. That is open-ended lease. It's written there. Also called finance lease. Because in finance lease also, the asset is usually transferred to the lessee at the end of lease term. But if it is an open-ended lease, the lease agreement says once the lease term is over, it will be compulsorily sold to the lessee. So who will bear the risk of fall in the residual value? Suppose you have taken a car on lease for 5 years and it is compulsory you have to purchase it here at this point, say at 15 lakh rupees. But after 5 years, the market value of the car is 5 lakh. So who will bear the risk of fall in the residual value? The lessee. Opposite of that is called closed-ended lease. Question in the exam was differentiate between open-ended and closed-ended lease. From which corner of the book they will ask you the question you don't know? Closed-ended lease means no compulsion to buy the asset at the end of lease term. No compulsion to buy the asset at the end of lease term. So these are also called true lease, walk away lease or net lease. So who will bear the risk of fall in the residual value? The lessor. Because after 5 years, suppose the car whose value is 5 lakh in the market, the lessee will not purchase at 15 lakh. So therefore the lessor would suffer the loss. And what is big ticket lease? That was also a question. These are jargons used in business world. Big ticket. In business world, big ticket means when the value is very high. When the value is very high. Like for example, Air India. It has taken 100 planes on lease from Boeing. Can you imagine the value of 100 planes? 100. Each plane will cost you about say 50 crore. Example. Maybe more also. That means the value of the asset taken on lease is 5,000 rupees in crore. So imagine how much lease rental per month they have to pay. That is why they are going into losses. Is it right? Continuous losses because of so much of lease rental obligation that they have to pay, etc., etc. So these big ticket lease are useful for expensive asset, really expensive asset like aircrafts, satellites. Even satellites are given on lease by the governments. That is why India has developed many satellites. That is one of the areas where we have really made good progress, great progress, okay, comparable with any other countries in the world now. So other small countries like Bhutan, Nepal, this cannot have their own satellite. Their country don't have either so much of scientific power or money power also to launch their own satellite. So what they will do? They will lease from us. We'll give them on lease. Okay. When you enter into such leases, you have to be very careful because the amount involved is very high. So generally companies take the help of professionals like you, okay, who are good in finance, who are good in legal aspect, who are good in tax aspect and technology aspect. After all these experts come together, they will evaluate and then finally you will sign the agreement. Because if something goes wrong, then there will be heavy losses. So that is big ticket lease. The value of the asset is very high. Generally used for expensive asset like aircraft, satellite. And example, Air India took 100 planes on lease from Boeing, and you need experts who will design the entire lease arrangement. What is cross-border leasing? Cross-border word is used in India quite often. Why it is used in India? Every day there is a cross-border firing near Anantnag. So what has happened? Person from other side of the border is firing on this side of the border. Is it right? So cross-border leasing means the lessor and lessee are on two different sides of the border. Means the lessor and lessee belong to two different countries. The previous example, Boeing, which is an American company or French company? American company, gave aircraft on lease to Air India, which is an Indian company. That is also an example of cross-border leasing. Okay, so cross-border leasing means the lessee and lessor are in different countries. That's it. And these leases are again structured for very expensive assets. For small asset, you will not go to different country. To buy a car, to take a car on lease, you will not go to America. Will you? No. But to suppose you want to buy an aircraft, 10 aircrafts, then maybe you can. So like example of asset which are used in cross-border leasing, rail and air transport equipment, telephone and telecommunication equipment, not mobile phone, the entire telecommunication equipments. Then asset used in power generation, distribution, etc. One more advantage of this kind of leasing is tax benefit, because different countries have different tax laws. So you can benefit from that. Your cost of financing is also reduced substantially, because different countries have different interest rate, different tax rates, and you can take benefit from that. You can identify countries where interest rates are low, tax rates are low, and you can negotiate a lower lease rental deal. Okay. Why will lessor be interested? Because he's the owner of the asset. In case if the lessee doesn't pay, he can repossess. So this also you take mark, cross-border leasing. It is very common in European countries, because Europe is a small continent. There two countries are like two cities of India. Just like you go from Mumbai to Pune, there you go from this Britain to France, or France to Germany. You just walk, not walk, you take a car drive in half an hour, 1 hour, you can just go to other country also, in 2 hours also. Is it right? So that is like one country only, but each country is independent there. What are the types of annual lease rental? In how many ways you can structure a lease rental arrangement? You should know that. Tomorrow you are going to take an office on lease. So one is stepped up lease rental. What is stepped up? Lease rental will increase gradually over a period of time. So this is one of the favorite question of your favorite institute. We'll solve the problems later. Step down lease rental. Lease rental gradually decrease over a period of time. See the example in your book 50, 40, 30, 20, 10. Or the institute gives you the lease rental will be in the ratio of 5:4:3:2:1. How much lease rental should be charged by the lessor to earn 20% rate of return? Or they also give you lease rental decreases by 10% every year. Find out the lease rental to be charged in the first year. Okay, so then you have to assume first number as X, second number as X minus 10% of X, 0.9X. This way you have to assume, solve one equation, you will find the answer. Third type, balloon payment. What is balloon payment? In such kind of leasing arrangement, generally no lease rental is paid in the first 2-3 years, 4 years, and a lump sum amount is paid towards the end. Like example in your book, 0, 0, 0, 0. So obviously the lessor will not agree to such 0, 0. So you compensate him at the end by paying a huge amount. So in the exam the question will be, what will be the 5th year lease rental which will give lessor a rate of return of say 20%. Is it right? So you have to find out that missing figure of last year. All problems you have to solve in the same manner. You just have to find the missing figure, whatever is missing. Then in some arrangement, deferred lease payment, there is a moratorium period. What is moratorium? The lessee may be given 1 or 2 years time to set up his business. During that period, he need not pay the lease rental. And then after 1 or 2 years, he will have to pay lease rental. Example 0, 0, 60, 60, 60. That means first 2 years he was asked not to pay. Okay, that is called deferred lease rental. So nowadays, because the competition is there in every business, you can negotiate for any type of leasing arrangement and they might agree to it because they want a customer. And the last one, which is the most common in the exam, is equated lease rental. What is equated lease rental? Lease rental are equal in all the year. Formula to calculate equated lease rental is equal to, equated lease rental is equal to cost of the asset divided by present value annuity factor will give you equated lease rental. This formula you have studied in time value of money. It is finding annuity. It is just you are finding an annuity. So they will ask you this general question. Cost of the asset is 1 lakh, lease term is 5 year, required rate of return is 20%. How much lease rental should be charged? Cost of the asset is 1 lakh, lease term is 5 year, 20% is your target rate of return. So lease rental to be charged will be 1 lakh divided by 20% 5 year annuity factor. How much is that? 1 divided by 1.20. Press equal to 5 times. Press GT function. 2.99. 1 lakh divided by 2.99. So 33,000 how much? 437? Approximately. Right now it is only for discussion. Here also there are two types of problem. Lease rentals are paid at the end of the year. Lease rentals are paid at the beginning of the year. This example assumes that lease rentals are paid at the end. If it was at the beginning, then your PV annuity factor will be 0 to 4 year and 20%, because first payment will be made in advance. So your answer in that case will be, if lease rentals are paid in advance, so how do you take 0-4 factor on your calculator? First you take 4 year factors only. 1 divided by 1.20. Press equal to 4 times. Press GT. Plus 1. So that is your factor now. How much is that? 3.58. So 1 lakh divided by 3.58. How much? 27,865. Is it 27,865? So if the problem is silent, we will assume lease rentals are paid at the end of the year. If the problem specifies lease rentals will be paid in advance, then we will assume, we will solve accordingly. Right? So sometimes they may specify, sometimes they may not. Now the next task is evaluation. So the question in the exam, repeated question since last 10, 15 years, 16 years, whether the lessee should purchase the asset by borrowing money or whether the asset should be taken on lease. So the question, which you can say is a permanent feature of your exam, borrow versus lease. Borrow versus lease. Borrow money, buy asset. That is, you can say buy versus lease. सिर्फ borrow करके क्या करोगे? Buy. So borrow and buy versus lease. So it becomes a decision making exercise now. Okay. So the leasing in essence is alternative source of financing to borrowing. Therefore, there is a tough choice between debt financing and lease financing. This is also a mode of financing. This is also a mode of financing. Instead of paying installment to the bank, you are paying lease rental to the lessor. So for you, it is either paying installment or paying the lease rental. There is an outflow every month, every year. So how do we evaluate? So I'll give you some general guideline. But according to question, you should be able to change your answer if required. It is simply a choice between two options. And how do you compare two options in finance? By comparing the present value of their cash flow. By comparing the present value of their cash flow. Like most of your financial decisions are simply based on comparing the present value of cash flow. Is it right? So what I'll do, I'll first find out after tax cash flow for each year under lease alternative. Formula, lease rental into 1 minus tax rate is after tax lease rental. Y into 1 minus T. For the lessee, it is a tax deductible expenditure. L into 1 minus T. Example, Lease rental is 1 lakh. Tax rate is 30%. What is your net cash outflow? So you will write 1 lakh into 1 minus 0.3, 70,000. Or suppose you forgot the formula, 1 lakh you will pay, 30% of 1 lakh you will save. So 70,000. Anyway you write 70,000, it is okay. And then you make a list of all lease rental that you have paid. Same thing you do for purchase option also. In purchase option there will be many cash flows. There will be borrowing, there will be repayment, there will be depreciation, there will be salvage value also. Is it right? So you have to consider all this, repairs, maintenance also, because now you are the owner, so you may have to pay the maintenance which you may not have to pay if you take the asset on lease. So make a list of all cash flows under borrowing option. Step number 3, compute the present value of all cash flows in both the options and then take a decision. How do you take the decision? We'll take that option where present value of cash outflow is minimum. Where present value of cash outflow is minimum, that option will be chosen. Why don't we take present value where cash inflow is highest? Normally, we do not write sales in both the options. Why we don't write sales in both the options? Both the options sale will be same. So whether I purchase the asset or take the asset on lease, will the sales be different? No. Suppose you go to watch a movie, okay, and you tell the ticket man, first tell me whether this theater is owned or leased. He says it is on lease. No, then I will not watch the movie. Who knows, after I enter the theater, the lessor comes and repurchase the asset, my money would be lost. Am I right? Possible, no? Possible, but the probability is very low. Is it right? Or you go to Yes Foundation office, I want to purchase audit book of CRT Lauti, but first tell me whether your company is owned or leased. Then the counterman says, no, it is leased. So I will not buy. I don't buy books written by authors who take asset on lease. Now, that is not possible. Hypothetical example. You are least bothered whether it is owned or leased. You pay the price, you take the book, matter is closed. Is it right? So revenue under two options will be same. Hence, it is not written in this chapter unless it is really required to solve the problem. Ignore common revenues. So now I have made a summary of what are the cash flow under leasing option you may get in the problem. One is you have to pay lease rental. You will write it as an outflow. For how many years? Over the lease period. Then taxation on lease rental. You will write it as inflow. For how many years? Over lease period. Then sometime the lessor charges processing fees also. If you go to some finance company, they will say sit down. Now you fill this document. Pay the stamp duty. Pay processing fees. If it is given, you write that also in the answer. Net of tax. Because it's a tax deductible expenditure. In year 0, show it as an outflow. And what about borrowing option? Now here I have written few items, but there may be more. When you purchase the asset, you have to pay a lot of expenses which you will not pay under the leasing option, like maintenance, repairs. Okay. Purchase of asset will write in year 0 as an outflow. Borrowing will write in year 0 as an inflow. Processing fees net of tax in year 0 as outflow. So normally in most questions, these are the 3 cash flows in year 0. Then you will pay interest and installment to the bank. Outflow. Time. Over loan period. Installment is not a tax deductible expenditure, but interest is a tax deductible expenditure. If you have written loan installment which includes interest also, then tax shield on interest will write separately. Tax shield on interest we will write separately. If you have written principal repayment separately, interest repayment separately, then interest will be presented net of tax. One advantage of owning an asset in this chapter is when you borrow and buy, you will get tax shield on depreciation inflow over the loan period. And being an owner, one more advantage, you will get the salvage value net of tax in the last year. In addition to that, the problem may specify you will have to incur repairs and maintenance cost, training cost, operating cost, which otherwise will be borne by the lessor in the lease option. Okay. Now, so we have learned how to evaluate. One more question which needs to be settled now. What should be the discount rate? What should be the discount rate you will use? So this is a little difficult answer. Especially the institute have made it more difficult by using different discount rates in different suggested answer. There is no consistency in the RTP and suggested answers over a long period of time. Sometimes they use after tax cost of borrowing as a discount rate. Sometimes they use after tax cost of borrowing as a discount rate. What is the formula for after tax cost of borrowing? Interest into 1 minus tax rate. Then the question would be, when should we use this? First is when the asset is substantially financed by debt. Like for example, cost of the asset is 1 lakh, borrowing is also 1 lakh, or borrowing is 90,000, which means the asset is substantially financed by debt. So therefore, I should use discount rate which is after tax cost of debt. First reason why we are using interest rate as a discount rate. Why we are not using weighted average cost of capital as a discount rate? So the answer for that question is, we are discounting future cash flows which are certain. We are discounting future cash flow which are certain. Suppose you borrow money, don't you know that on this date I have to pay installment? Don't you know that on this date I will have to pay interest? You know what tax shield you will get on interest? You know what tax shield you will get on depreciation. So in your capital budgeting chapter you have learned, if cash flows do not include risk, discount rate also should not include risk. My cash flows are predictable. I am not writing business cash flow here. What cash flow I am writing? I am only writing interest payment, installment payment, tax shield on depreciation. Today only know after 6 years how much installment you are going to pay, how much interest you are going to pay. So cash flows do not include risk. Therefore, discount rate should not include risk. It should only include the basic time value of money. It should only include the time value of money consists of opportunity cost, risk premium, inflation premium. So inflation if given then we'll include that. Otherwise ignore in this chapter. Risk premium I will not include because there is no risk. Cash flows are predetermined. Cash flows are predetermined. Similarly for lease also. In the lease agreement it is written 2 lakh rupees per annum will be paid for 5 years. So I know that these are the dates, this is the cash flow, no risk. So that is why interest rate. Next question, why after tax cost of interest rate? Because cash flows are written after tax. Lease rental after tax, interest after tax, tax shield on depreciation. So if cash flows are in after tax format, the discount rate should also be in the after tax format. Is it right? If cash flows are pre-tax, discount rate should be pre-tax. If cash flows are post-tax, discount rate should also be post-tax. So since I am going to write cash flows in post-tax manner, discount rate will also be post-tax. Second option is to use WACC. When should you use this option? When asset is funded partly out of own fund and partly out of borrowed money. You will use the same discount rate for both leasing option and purchase option, borrowing option. Don't use different discount rate. But the last instruction is most important. ICI is the boss. Question says the lessee uses 8% discount rate for evaluation purpose. Then I will not use my own mind now. 8% discount rate will be used to compute the present value. If that was not given, then I will use interest rate after tax. Okay, so what you will do, you first check whether ICI has given any particular rate of discount. Yes, use that. Otherwise, use this rate, interest into 1 minus tax rate. That will be acceptable in the exam. What about the salvage value under purchase option? Don't you remember we have discussed this chart earlier also? If you purchase the asset, then after 5 years, you may sell it. When you sell it, capital gain issue may arise. Situation 1, left side, sale value is greater than book value. Capital gain. Tax on gain is equal to tax rate into profit on sale. Net cash inflow will be salvage value minus tax on gain. If you sell equal to book value, very easy, no gain, no loss. Cash inflow is equal to salvage value. We will come across this situation in few problems. Salvage value is less than book value. There is a loss. Loss has an advantage from tax point of view. It will help you to save taxes. So tax saving is equal to tax rate into loss on sale. Net cash inflow will be double now. Double in the sense, two things you have to add. Salvage value plus tax saving on loss. Examples have been discussed in capital budgeting chapter. Is it right? So that was from lessee's point of view. Now, lessor. From the lessor, my task is very simple. It is as good as solving a capital budgeting problem. He will have to first buy an asset, invest in the asset. So that is year 0 outflow. And then he will receive lease rental every year, which is a cash flow after tax inflow. Plus he will get tax shield on depreciation also. Plus he will get salvage value also. So it looks like a simple problem of capital budgeting. It looks like a simple problem of capital budgeting because most of the numbers are simple and clearly given in the problem. At the most you may have to compute depreciation or in some problem that lease rental if it is not given. Is it right? And all principles of capital budgeting will apply. What about the discount rate? For him it is an investment. So he will use his cost of capital as a discount rate. He will use his cost of capital, but ICI is the ultimate boss till you pass. If the institute says the lessor uses 12% discount rate, then you use 12% discount rate. Now, next is the concept of break-even lease rental. What is break-even lease rental? There are two definitions of break-even lease rental. One from lessee's point of view and one from lessor's point of view. From lessee point of view, break-even lease rental means it is that lease rental at which present value under borrowing option is equal to present value under leasing option. That is break-even lease rental, so that he is indifferent between the two options. So the question in the exam, many times they have asked this question also. How much should be maximum lease rental that the lessee should be pay so that he is indifferent between purchase option and leasing option? So what you will do, you first find this figure. You will first find this figure, divide by annuity factor, divide by, so that will give you lease rental required, which will also give you the same present value. So if the actual lease rental is more than this, borrowing will be preferred. If actual lease rental is less than this, leasing will be preferred. So one more way to evaluate borrow versus lease is to first find out the break-even lease rental. Then check what is the actual lease rental the lessor is going to charge. As a person, as a businessman, I should know what is my maximum lease rental I should be willing to pay. So for that, this knowledge is required. Actual is greater than break-even lease rental, purchase is advisable. If actual is less than break-even lease rental, lease is advisable. Okay, these 2 points you can write down from lessee's point of view. If actual lease rental is greater than break-even lease rental, purchase is advisable. If actual lease rental is less than break-even lease rental, leasing is advisable. Okay. So this will require you to go for first do everything and find out the present value under borrowing option. And then you can easily find out what will be that lease rental which will give me the same present value. Okay. From lessor's point of view now, I'm going to explain from lessor's point of view. Before that, one more thing they will ask you sometimes. What is the net advantage of leasing? What is the net advantage of leasing? Net advantage of leasing means, NAL means, present value under lease option, present value under loan option minus present value under lease option is called net advantage of leasing. That means how much you will pay under loan option, say 10 lakh. How much you are paying under lease option, say 9 lakh. So leasing is beneficial by 1 lakh. So break even lease rental is that lease rental at which net advantage of leasing is 0. That means the two figures are equal. That means the two figures are equal. When the two figures are equal, the net advantage of leasing is 0. Right? So formula for net advantage of leasing is present value under loan option minus present value under lease option. And when the net advantage of leasing is 0, that lease rental is break-even lease rental. In other words, this is the maximum lease rental the lessee is willing to pay. Otherwise, it is better to go for purchase option. Now, from lessor's point of view, just one line. What is break-even lease rental? That lease rental at which NPV is equal to 0. From the lessor point of view, that lease rental at which NPV is equal to 0. Now, does it mean he is not going to earn anything? If the NPV is 0, you have earned a rate of return equal to the target rate of return. So what is the purpose of computing this break-even lease rental? How much minimum lease rental we should charge? So that is called floor value. Floor means minimum. How much minimum lease rental the lessor should charge? So you have to find out that lease rental at which NPV is equal to 0. Or where IRR is equal to cost of capital. Is it right? That lease rental will be charged. If he charges more than this, NP will be positive. If he charges less than this, NP will be negative. So when you are the lessor, you should know how much you should bargain, maximum or minimum. That is, you will not accept the proposal of lessee below this limit. You will say, I will suffer a loss. Okay. Now the last part of this wonderful chapter, theory part, difference between leasing and hire purchase. Another 4-mark question. In both leasing and hire purchase, we obtain the right to use the asset. We pay installment. We don't have to invest the entire amount of money. But there are some accounting difference, some financial difference, some management difference. For example, ownership. You have learned hire purchase system in your accounting. Once you pay the last installment, ownership will be transferred in hire purchase. In leasing, ownership is generally never transferred to the lessee. In your book, generally, what underline? Generally. Because sometimes in finance lease or open-ended lease, ownership is transferred to the lessee, free or at some nominal price. Down payment. Hire purchase involves 20 to 25% of the cost of the asset to be paid as down payment. Lease financing, no down payment. Enjoy. Depreciation. In the books of account of hirer, in the books of account of purchaser, you have studied hire purchase system. Remember those happy days. In whose book you have provided depreciation? In the books of buyer, hire purchaser. But in case of leasing, AS 19 is applicable. And it depends on types of lease. If it is an operating lease, accounting standard 19 says lessor will provide depreciation in the books of account. We are talking about depreciation for books of account purpose. So write here to avoid confusion, for accounting purpose. Accounting and taxation are different issues. Okay. In books of account you do whatever you want to do. For tax purpose the rules are different. So this depreciation is charged means books of account. Finance lease, lessee will provide depreciation. Maintenance cost usually borne by the purchaser. But in leasing it depends. Operating lease, lessor. Finance lease, lessee. Tax benefit. Before that, capitalization. Same question. Third and fifth are same. It is like writing BCom answer. Same thing in different ways. If the asset is depreciated in the books of hire, it will be capitalized in the books of hire only. If the depreciation is provided in the books of lessor here, so it will be capitalized in the books of lessor. If the depreciation is provided by lessee, it will be capitalized in the books of lessee. Finance lease. Tax benefit. Hire purchaser gets benefit on depreciation and interest. Leasing, the lessee gets taxation on lease rental. 7. Risk of obsolescence will be borne by the hirer. Whereas in this case, operating lease lessor, finance lease lessee. Then 8. Reporting. The asset is shown in the balance sheet of the hirer and installment payable is shown as a liability. In operating lease, lessor would capitalize the asset. In finance lease, the lessee would capitalize the asset. And amount payable to lessor is shown as a liability. So this much difference is enough for a theory question. Now we'll solve question number 16. Last question and the chapter is over. Yes or no? Tomorrow. You will try 16 and come.